Good evening to all. This is Anshita from SmartFX, and my today's topic of webinar will be how to choose your Forex broker. So, an overview of what we will be covering is this. In this webinar, we will be covering some of the most important topics that you need to look at before you choose your Forex broker, because there are many things that you need to see while you're getting started with a broker or with a relationship manager specifically. And you need to have knowledge about where you're investing, what kind of a broker is it, how long has it been running. And as a beginner with no experience, you might not know much about how the brokerages work and what they're supposed to provide you. So you need to do your research very well before you get started. So first coming to regulations. Now regulations is one of the most important things that you need to look at when you're investing with a broker, because that will give you the security as in where is the broker regulated from? Is your money in a safe place or no? Like I've said, Forex is the largest, most liquid market on the planet. The size and scope creates unique challenges regarding market regulation. So the size of the forex market is so huge that it creates a very challenging competition between brokers, in which people and clients may not be able to differentiate between original and fake or scam brokers. So there is no centralized body governing the currency trading market. Instead, several governmental and independent bodies supervise forex trading around the world. There is no specific or centralized government, governing the currency of the trading market. Instead, there are many different types of independent bodies and parties that supervise the forex and the trading market around the world. One of the most important criteria for traders when choosing a forex broker is the regulatory status of the broker and under which regulatory body the broker is regulated. So you, like I told you, it's one of the most important things you have to see when it comes to choosing your forex broker, where they're regulated from, how long they've been in the market and everything like that. And likewise, you need to do your research accordingly. Execution and speed policy. So whenever you're investing with a broker, you need to see and learn their platform very well. You need to see if their trades are being placed on the correct time, and what are the policies that they have been providing you, and are those policies um, benefiting you and suiting your trading style. So execution and speed policy. Execution is a particularly important in the fast and dynamic forex market. A good strategy can be easily be undone by bad execution. So even if you have a good strategy of trading in the market, it can be gone wrong if your execution is bad. That means if that will be the broker's problem if your execution is bad. So you need to check. Uh, Maybe you can have a demo account at first and check the execution policy of the platform. Execution speed of the broker refers to the time an order is made with the broker until it is carried out in real time on the market. When day trading, this is a crucial consideration, but it's trickier than it seems at first. So, like they're saying, execution, I'm just explaining what is execution here. Once you place an order, how long does that order take to actually be executed in the real market? And when it's day trading, you can see maybe it's a crucial consideration there, but it's more trickier than you might see at in first. Order quality evaluates whether or not you made the best potential deal based on a variety of factors such as speed, price, and likelihood of the execution. A broker's execution speed is measured by how quickly they carry out your trade after receiving your order. So that's how you can calculate the speed policy, and the execution of a broker is once you place the order, you need to see how long is it taking from being your order placed to it actually getting executed in the market. Now, coming to commission and spreads. So there are many brokers out in the world, and you have to see what kind of commission, what kind of spreads they'll be providing you, and if that is suitable for you, and if you are agreeing to those terms. So I'm just going to give a brief about what commissions and what spreads are. So commission is the trading fee that you get charged by Traders Trust, your broker, for facilitating the placing of your orders. Depending on the account type you choose, commission charges and types differ. For the classic account holders, commission is included in the spreads. For pro and VIP account holders who trade in forex, metal commission is charged separate fixed per fee a lot, round lot. So, like it said in here, your broker might differ and you must have a different account type through which your broker must be charging you commission. It's the fee that you get charged by your broker depending on your account type and the deal you have made with your broker. When it comes to spread is the difference between the bid and the ask price. It is primary cost for your trading, a small cost bill to buy and sell the price of the instruments. Spreads can tighten or widen depending on your economic condition, market volatility, and market liquidity. Among other factors, improving economic conditions may cause spreads to tighten, while declining economic condition may cause them to widen. So spreads differ from the market, how the market is moving that can determine your spreads position, and you need to see if your broker is charging you what they actually said they would be charging you, nothing higher than that. Customer service. Now, when it comes to customer service, it is something very crucial because it's trading. Anything can happen to the person's account, and they might need a customer service maybe at all times. So you need to make sure that your broker is always available for you, and being there when if you have any complaint or you have any doubt, so they are there to cover that. A good broker must offer responsive and efficient customer service so that they never have to worry about any technical issues, deposit withdrawal concerns, or in any aspects that will be hinder smooth trading activities. Ideally, customer support should be multilingual, available 24/7, friendly, professional, a very responsive broker basically. A broker with good customer service will definitely make your forex trading experience more enjoyable. So there are many things that a client can have to ask the customer service, basically how you want to deposit, withdrawal, or concerns in any aspects. So in order to maintain everything smoothly and have a professional and a very enjoyable experience while you're trading, you need to make sure that your broker that you're trading with, customer service is good. So to meet the increased expectation of our clients, we have built a team of proactive client support representatives who understand their customers and possess two skills effectively and address their problems. And that is why our broker, personally, Smart Effects, we have a live customer service 24/7 hours of the day, including your relationship manager. Whenever they are not available, you can just directly reach out to the company or go on the support system itself. Also, now coming to leverage and margin. Leverage and margin is also very important, differs from every other broker, like any other case. And you need to see if this is the leverage that you need, your margin is enough for you, and everything like that. So, leverage in Forex is a way for traders to borrow capital to gain a larger exposure to the Forex market. Now, leverage is, you can call in simple word, a loan that you're taking from your broker to use it in to get into higher quantities into the market. With a limited amount of capital, they can control a large trade size. This could also lead to bigger profit and losses that based on full value of the position. So leverage can be equally good and bad for you depending on how you use it and how much you're using of it. So when we're coming to margin, new forex accounts are opened as margin accounts, letting clients buy or sell currency pairs with a total trade size that is much bigger, larger than the money used to fund the account. Fund the account. So that is what we're saying, explaining margin, what it is basically. We're letting the broker, the platform is letting the clients buy or sell currency pairs or any other kind of instrument, much bigger size than what they have actually invested, the funds. And US brokers typically allow individuals to open account for as low as $100 or $500, while offering up to 50 is to one margin, providing significant leverage, which is another way of saying your trade sale will be larger than your current account balance. So as you can see, if a broker is providing you a margin of 50 is to 1 on an account of $100, which can be very risky when you're trading. So that means you can take a trade larger than the funds that you've invested. Different deposit methods when you're investing with a broker. Many people might not want to do it from one way or the other, so you need to make sure that your broker has multiple ways of deposit and withdrawal. So some of the most common example of different payment methods and deposit methods are debit and credit cards, bank wires, Skrill, Neteller, USDT, WebMoney, SoftRoad, GiroPay, PayPal, PayPal China, Union Pay, and everything like that. Checks which are mostly cashed by the US brokers. And so you have to make sure your broker, like I said, they need to have multiple sources of deposit methods and payment methods. So there are different account types when people are entering the forex market. They require different account types, and you need to see the account type that you're looking for. Your broker is able to provide you, or is flexible with providing that to you. So many brokers will have a tiered account structure actually based on your deposit amount. Terms will generally improve for larger amounts with more favorable spreads, greater access to software tools and market analysis, dealing room access, personal account managers, and freebies. So basically, it depends on the amount also that you're investing and what type of account do you need. Do you need a standard account, a VIP account, a commission-free account, a raw spread account? That can be, yeah, you need to see that your broker is flexible enough to provide you with all those accounts. So some examples of different trading accounts that usually people open in the market are MAM and PAM accounts, standard and VIP accounts, ECN accounts, which is raw spread account, and also demo account. When the client just wants to see if this broker is suitable for them and they just try out for the demo account. So your relationship manager, a very crucial part that we're coming to here, that you need to have a relationship manager that you trust the person, you know the broker, and you know that the person will be available to help you out whenever your account is at risk or you have any complaint or doubt in that sense. A relationship manager is responsible for building and maintaining positive relationship with customers, identifying opportunities for business growth, and resolving customer complaints. They possess excellent communication skill and problem solving skills and work closely with sales and marketing teams to boost profitably and customer satisfaction. So this is the relationship manager's job to make your trading experience very smooth so that you can trade for a long time with the broker itself. They also help to build positive relationship between you and the client itself, assisting with generating new business. Maybe if you like the broker, you would be recommending someone else, and the same relationship manager will be dealing with them. Identifying opportunity for greater profits, maybe giving you some information here and there that can help you to make more profits in the market. Understand customer needs and develop plans to address them. So when if you have any need, any type of query, any type of complaint, your relationship manager will be dealing with you regarding to that. And they also gain solid knowledge of their competitors. So in conclusion, if you have confidence in your forex broker, you will be able to devote more time and attention to the analysis and developing forex strategies. A bit of research before committing to a broker goes a long way and can increase an investor's odds of success in competitive forex market. So, like I said in the first slide, it is very crucial for you to um, research about your forex broker, meet with them, maybe have a demo account and see how it is going. You should carefully choose your forex broker before you decide to put your money in their hands. All things mentioned in the webinar, you should consider to make sure you're getting the most out of your trading experience. Thank you so much.